Welcome back to the TBE Podcast. My name is Ollie Forsyth, I'm your host, and I'm the founder of TBE, the global community of 35,000 budding entrepreneurs. I cannot wait to share with you who today's guest is. But just before we dive into the interview, we would just like to say if you are looking to fundraise for your business, we would love to hear from you. And to do this, please do get in touch by emailing info@tbeclub.com. Or if you would like a quicker communication, please just go over to Instagram and send me a message. You can do this by following Ollie Forsyth. Now, moving into the interview, I cannot be more excited to welcome today's guest, Boris Wertz, the founder and managing director of Version 1 Ventures, one of North America's leading early stage funds. So let's crack on with the interview and see what Boris has got to say. So welcome to the TBE Podcast, Boris. How are you doing?
Very well. Thanks for the invite. Glad to be on the show.
No worries, Boris. What are you up to today? How's your day going?
Very well. It's a nice Monday morning here in Vancouver where I'm based and excited about this week.
Very nice. And what did you have for breakfast this morning?
For breakfast, actually, I didn't have anything besides the coffee. I had a huge dinner last night and I felt no breakfast this morning, just the coffee. So on the lighter side.
Well, that sounds pretty good. I hope the dinner was very nice last night. So moving on to companies, what is your favorite company right now that you most admire?
Tough to choose kind of your favorite children. Version 1 Ventures, we have over 45 active portfolio companies. And they're a bunch that certainly not only do well, but also try to do good in the world. I think the one I continue to be very excited about is Figure One, which is a social platform for doctors and nurses to exchange medical knowledge around patient cases, and really try to teach medical knowledge across borders, across regions, and really democratize access to that knowledge. So continue to be very excited about that company.
Awesome. And what is the one thing you would have changed differently before you turned 20?
Before I turned 20, it's kind of funny. I'm not quite sure if I would have changed anything, and you mean probably in my own life and what I did. I think it's probably more in terms of what I would give people advice to. I think I did very little specialization until I was 20, and even until I was 25, I was interested in a lot of things. And I feel these days, schools and universities trying to push you earlier and earlier in kind of picking a certain area, a certain vertical, a certain specialization. I think like the biggest advice I have, and that was based on kind of how I kind of led my life, at least until the age of 25, is to look into many things, get to know many things, get passionate about many things, and then at some stage you can settle down and specialize, but don't do it too early.
I completely agree. Some really interesting and useful advice in there for some of our listeners. And moving on to entrepreneurs, who's the entrepreneur that you most admire right now?
I think it's not a super original choice, but I think it's Jeff Bezos. Not because Amazon has been such a juggernaut and kind of one of the most valuable companies in the world. I think what is just incredibly inspiring is to see how he has kept a real entrepreneurial culture at Amazon, despite that company now literally having hundreds of thousands of employees. And you probably couldn't find an equally entrepreneurial culture in any big company. So incredibly exciting to see how he has kind of kept that spirit, that startup spirit alive, even though, being 20 years in and having grown to several hundreds of thousands of employees.
Awesome. No, it's amazing to see what they have created in, I guess, such a short time frame. So diving into the interview, for those of our listeners who don't know anything about you whatsoever, if you could just summarize your career in 2 minutes, what would it be?
In 2 minutes. So former entrepreneur turned investor. I started a company in 99 in the internet at 1.0 age. We sold that ultimately to Amazon Then I switched over to the investing side, first just as an angel investor, trying to figure out if I was any good at investing, and then started to turn that into a profession, raising now 3 funds for Version 1 Ventures. We're an early stage fund, then invest in tech companies across North America, and mostly tech companies that are focused on network effects like marketplace, social platforms, and more recently spent a lot of time in crypto and healthcare bio.
Awesome. And so you co-founded your first company, Just Books, in 1999. The idea was a marketplace for used books and rare books. How did that idea come about, and why did you start it?
Yeah, so we were all still at university, actually writing our PhD thesis, and we saw how expensive it was to buy textbooks, new textbooks. So we thought about why not use this new tool, the internet, to build up kind of a marketplace for used textbooks, and kind of that expanded into all sorts of secondhand books. They were rare, hard to find, out of print, used. At some stage we even added new books, and it became really that marketplace that connected more than 10,000 booksellers on the one hand side with millions of customers on the other side that were looking for those books. So it originally felt like a real niche idea, but grew into a marketplace that transacted over $250 million in gross merchandise sales per year when we sold it to Amazon.
Awesome. And was it always just books, or did you start going into other things apart from books?
Yeah, we looked at many verticals over the years, if that was movies or music, etc. I think the challenge was that both of these verticals digitized very quickly. So the real physical market of LPs or CDs or DVDs in the movie section just grew very slowly. It actually shrank very quickly, right? And so besides the real small collectible market, there was not anything really there. So we never really expanded into other verticals. But what we did is really internationalize the business model. So over the years, we expanded into a bunch of countries where we had actually, kind of country websites, and certainly expanded the supply into over 40, 50 countries.
Awesome. And before we go on to the exit, which you had quite shortly after you launched, have you always wanted to be an entrepreneur? Where did that entrepreneurial hunger come from?
Yeah, I always wanted to be an entrepreneur. My parents were both entrepreneurs, and so it was pretty clear that I wanted to be an entrepreneur. And I knew that for a long period of time. I think the question was always like, when do you do it? And the challenge is always, I think you just whenever you see the right timing come along, you just have to jump. And for me, the right timing was with the emergence of the internet in '99. I originally had planned to just take on just a normal job after university, and suddenly realized there was something special going on, and I jumped on the opportunity and started my own company. But so it was always the plan. The timing was never quite sure, and I'm glad I kind of made the jump when the opportunity came along.
Awesome. And talking about 1999, when you founded Just Books, 2 years later, an exit opportunity came about. How did that come about, and who did you sell Just Books to?
Yeah, so a lot of your listeners probably don't remember the 99 to 2001 area, but 99 was together with 2000, the height of the bubble. It was an incredibly crazy time. It was super easy to raise money, super easy to kind of grow fast. A lot of excitement, and unfortunately, in 2000, the bubble burst, and then started what we called at the time the nuclear winter of fundraising. There was just like no way to raise additional funds. So at some stage, we got approached by Books, one of our competitors out of Canada, that had never raised any money and any venture money. They were profitable. And they were interested in acquiring us. They didn't have any European presence. We had built this company, Just Books, in Germany, France, and England. And so it was the perfect time for us to sell the company. And then consequently, my co-founder and I, Hannes Bloom and myself, we got invited to come over as CEO and COO respectively and joined headquarters over in Canada. So it was kind of a lucky turn of things in 2001, because otherwise I'm not quite sure if we would have survived given the funding environment.
Amazing. And so did you move to Canada because of your new role at A-Books? How did that come about?
Yeah, so as I said, we got invited to kind of join headquarters. I thought I would do it for a couple of years and just enjoy the experience. And then came over to Canada, met my wife a few years in, and the rest is history. So I'm now kind of half German, half Canadian, and happy living in Vancouver, Canada.
Amazing. And so A-Books was then sold to Amazon. Were you involved in that process?
That's correct.
And how did that come about?
I was involved in the initial stages. Involved in the initial stages, but then left before we closed the deal. I was ready to move on. I had been eight years between Just Books and A-Books, and I was ready to kind of take my career into a different direction, which was investing. And Amazon 8 books since then, and the company has done very, very well under their ownership.
Fantastic. And I guess just before you sold it to Amazon, did you see the book market change completely from 1999 when you started Just Books? How much did that market change, I guess, in about 10 years?
Yeah, I mean, luckily, when we were still running 8 books, I think that the book market, our particular niche actually exploded, right? Because it was easy and easier to kind of buy these hard to find out of print books, and the access was so much easier than before, you know. So I think our particular niche really exploded and was kind of a big factor. I think after we sold to Amazon, then ebooks came along and became a much bigger part of the story. And yeah, to this stage, I think kind of you look at the past 5 to 7 years, ebooks have grown much more in market share. So which certainly has been a little bit more challenging for everybody whose business model is based on physical books, like A-Book's business model was. But at the time when we built A-Books and Just Books, it's kind of the golden era of hard to find books and that whole market. I
guess just before we start going into your founder and your investing, what is the biggest lesson you learned from running a startup at Just Books?
I think there's a bunch of lessons. I think the first one is take a long-term view of things. Like good things usually don't happen overnight, and sometimes you just have to work at it very, very long. I think the second one is, focus on what you can influence and you. There's tremendous amount of lucky events that can happen or can't happen, but don't let yourself drive yourself crazy by that. When you think about our acquisition, Just Books acquisition by A-Books in 2001, if, as I said before, if they hadn't come along, most likely Just Books wouldn't have survived, right? And so that's just a lucky coincidence that, had all sorts of benefits down the road. But there's nothing we could have done at that moment to make that happen or not. So take the long-term view, and work towards that, and achieving your vision, but also don't get too nervous or excited about, what's happening in the short term. A lot of the things are just, you can't influence them, and they're just outside of your control.
And from memory, what was that hardest moment and the hardest challenge you ever had at Just Books and A-Books, which you can remember?
We were a few times away from just not being able to pay salaries. Just funding ran dry. And, as an entrepreneur, if you're responsible for employees that put their hopes into you, and you potentially will disappoint them, that just keeps you awake, right, at night, and is an incredible pressure. So in hindsight, you forget about these things, but I still remember some nights I was laying awake, worrying about these things.
Super interesting. And you said you had, I saw in one of your articles, you had a couple of co-founders. Is that really important, having co-founders along the journey? Or are you someone who just...
I personally think it's super important. It's super important for two things. The first one is everybody has slightly different interests and talents, right? So my co-founder Hannes, he was always super interested in finance and legal and it's HR and kind of and that internal operations. I was always much more interested in everything that was kind of customer market facing, like product development and marketing and sales and business development. So I think we just made for a really good team. And then secondly, I think everybody has in this emotional roller coaster that a startup is. Everybody has like good days and bad days, and the good thing is when you have a bad day, usually your co-founder can pull you up and pull you along. And so I think it's just super important that you have co-founders. Having said that, it's tricky. Co-founders often don't work out for various reasons because they don't get along or they can't agree on strategy. So it's incredibly hard to find great co-founders, but if you find them, it's certainly a magic setup.
I completely agree. And how did you find your initial co-founders? Was that difficult?
So we got introduced to each other at the university. We all were in one way or the other linked to to a PhD program, and so that's how we got to know each other. I would say it was probably more luck than anything else. It's tough to find people, and I consider myself these days, lucky that I found such great co-founders.
And you just mentioned a PhD, which I was super interested about. Has that been of any use in your entrepreneurial career so far?
That's a good question. But the joke is my PhD was in logistics, and 8 books and just books were all about not logistics. We never saw the book. We never touched the book. It was a marketplace that connected the booksellers directly with the consumers, but we were not a middleman. We just connected these people. And so the joke is like that whole PhD was for worth nothing, right? Reality is, I think for me, the PhD did 2 things. A, it connected me with a bunch of really interesting people. Not only my co-founders, but other interesting people I met during that time, and it kind of inspired me in one way or the other down the road. And then secondly, it's actually a really good exercise to spend, in my case, good 2 years on one specific topic and trying to go deep into this one, right? And so I think it's an incredible discipline to do that. But having said that, worked out. I don't think a PhD is necessary for most entrepreneurial activities you have, and overcome.
Fantastic. Thank you for sharing that. And so I guess moving into your investments, you started off as an angel investor, then you moved into VC. Why did you transfer from angel to VC? And, I guess what kind of companies were you investing in when you were doing angel investing?
Yeah, so when I started switching over to the investing side, I wasn't quite sure how good I was at it, how much I liked it. So I took that angel investing period as a way to kind of prove myself and also figure out if I could imagine that as a full-time career down the road, right? And so after 4 years, I had both the track record as well as the conviction that this was something I wanted to do full-time. Whenever you raise an institutional fund, you commit for the next 10 years. You can't just, close down the next day and say, I'm going to do something else. So I really wanted to be sure that this was something I wanted to do for the long term. In terms of investments, the normal thing is when you start out, often it's kind of the local deal flow that you go for. So I invested in a lot of Vancouver companies because that's where we're living. and am living at the time. From there on, I expanded out. I started to have a investment thesis and working with a few VCs during that time, formulated that investment thesis and formulated my focus and became narrow. That was the early transition into investing across North America, not only locally, and in investing in something that was backed by a thesis. In my case, really thesis of companies that leverage network effects to build large defensible platforms.
Awesome. And you said obviously, track record is very important when you're investing. You went to go then and launch version 1 Ventures. What was the idea behind that? And did you ever just think maybe I'll go and work for another VC? Why did you want to go and just start your own?
Yeah, I mean, to be honest, I thought about that a few times. At the same time, perhaps it's still the entrepreneur at heart for myself. I like starting something myself and building up myself. So for me, like starting my own fund, after I'd kind of learned to trade a little bit by investing myself was the right strategy for me. But many other people have just gone down the road of joining existing VC. I mean, the beauty is these days it's easier than ever before to start your own firm. There's now over 500 what we call micro VCs, so small venture capital firms with 1 or 2 or 3 partners, and so that whole category has really exploded in the last level. So it's definitely much easier today than it was ever before to start your own firm. And I certainly kind of benefited from that trend.
Fantastic. And version 1, what kind of companies are you investing in and what industries?
So as I said before, our investment thesis is focused on network effect. And that could be in different verticals or different business models. So, traditionally we've invested a lot in marketplaces and social platforms. More recently, we invested a bunch in SaaS companies that leverage data network effects and artificial intelligence and machine learning to build really interesting companies. We spent a lot of time in crypto and blockchain, as well as in kind of bio and healthcare. So, overall, we feel like we're very agnostic when it comes to business model and vertical, as long as kind of underlying, we feel like there's an interesting network effect at play, either by connecting people with other people or by connecting data with other data.
And have you found the mindset to be different from angel investing to VC, or is your mindset still exactly the same?
Yeah, I think there's 2 things that change. I mean, the first one is when I started investing as an angel, I still was very early in my career as an investor, right? And it's actually pretty easy to write a $25,000-$50,000 check into a bunch of companies, and you have obligation of fiduciary duty that you have when you're a VC. I think the second thing is just as you have larger amounts to invest, you certainly need to figure out how can you invest them, where are the opportunities, what will be the companies that are true outliers and can drive the return. So I think it's a very different approach between investing $25,000 to $50,000 and potentially leading around of $500,000 to $750,000 and kind of taking a board seat and staying with the company for a long period of time.
Super interesting. And from a skills point of view, in your honest opinion, what is your best skill as a VC, and what is the skill that you're absolutely terrible at?
So I think my skill is probably finding the right balance between giving advice and listening. Ultimately, us VCs, it's dangerous to get too active in a company. It's not our companies, right? It's the entrepreneurs that run these companies. At the same time, you want to help out and give advice and give honest feedback. So I think finding that right balance between understanding who's ultimately responsible for the startup and who's really the player and who's the coach, but at the same time finding these opportunities to give advice and feedback and and help people kind of succeed and based on the knowledge you're sharing with them, based on the advice.
And when companies come and pitch to you, what do you see the biggest mistakes entrepreneurs make? And are their valuations always ridiculous?
So you mean like in general, the biggest mistakes they make?
Sure, yeah.
Yeah, so I mean, listen, I'm not quite sure if the biggest mistakes. I mean, as you know, like most strengths come with weaknesses and vice versa, right? So I think the biggest strength of entrepreneurs, they're incredibly optimistic. The biggest weakness of entrepreneurs, they're incredibly optimistic, and sometimes perhaps they don't want to see reality. Perhaps they're trying to grow too fast. Perhaps they're spending a little bit too much. But otherwise, they wouldn't be entrepreneurs if they didn't see kind of a huge opportunity, if they didn't have a big vision, if they didn't want to drive aggressively towards it. So, yeah, I think the biggest mistake, sometimes we see that they're a little bit too optimistic about what they're trying to achieve. But as I said, otherwise they wouldn't be entrepreneurs, and otherwise they wouldn't even have that opportunity in the first place.
That's very true. Having a strong mindset is very important. And do you see a lot of entrepreneurs coming to you, pitching to you with ridiculous valuations, or are they normally quite modest?
Yeah, I mean, it really depends. I think overall, and we've seen that between Fund 1 and Fund 2, I think entry valuations for us have gone up by 30-40% as they have for the whole market. I think there's certain pockets where they have become ridiculous. But, in the end, you always have to decide, like, how big is that opportunity? How much do you believe that this entrepreneur can kind of create value? Entry valuations is important, right? But it's not everything. The question is, how does it relate to the opportunity? How does it relate to the quality of the team? And that's kind of what we're trying to figure out on a daily basis.
And I'm sure from your career, you've had a few ups and you've had probably many, many downs along the way, probably too many to count. What is that one up that really sticks in your mind? And what is that lowest moment you've ever had as an entrepreneur?
Yeah, listen, I mean, I think as an entrepreneur, ultimately selling the company to Amazon, and that was at the height of the financial crisis in 2008, was definitely one of the highlights. I mean, very few entrepreneurs get the opportunity to sell the company at all at a great valuation, and very even fewer get the opportunity to sell it to kind of an iconic company like Amazon. So I think that was kind of the biggest height, right? I think the biggest low, I mentioned that before, was probably moments where we thought we were running out of money at just books and just struggling with it. When you compare it on the investor side, I mean, it's very different. Your highs are not as high and your lows are not as low. The wins are not your wins, it's the entrepreneur wins, and at the same time, if something bad happens, it's not you, and you're always a step removed. So, I always think like that the emotional roller coaster for entrepreneurs are larger than for investors, and I sometimes enjoy that now to not be as dark emotionally involved as I was as an entrepreneur.
And when you have those lowest moments, how do you pick yourself back up? Things are going to be all right. We're going to go through this. Mentally, it's very challenging. How do you do that?
I think sometimes it's just, as I said before, you take the long-term view, that long-term view, and just pushing through kind of short-term pain.
Pushing through short-term pain sounds pretty good to me. And so just you've got to do it to make you stronger, I guess. And what is your plan for the next 5 years? You've just raised your first fund. Congratulations. What's the plan next?
Thank you. I think we'll continue to do what we do best, which is kind of being very disciplined around the types of startups we're investing in. I think there's right now in the market that is pretty heated up. I think there's a lot of movement of people trying to raise way bigger funds or moving different areas, et cetera, et cetera. I think we stick to our lane and just trying to be a little bit better every single day, and think like that will prove to be the best strategy going forward. So no big changes, just trying to get better, a little bit better every single day.
Awesome. Trying to, I guess, improve 20% from the day before. And to finish off,
Yeah.
this is one piece of advice you would give to a budding entrepreneur.
Just do it. I think at some stage you just have to jump. There's a lot of people that kind of think about business plans and the right team member and when it's the right timing and the right opportunity. Sometimes you just have to do it. And once you start doing it, you're out there, opportunities will come to you, etc. So do a little bit of planning and thinking, but ultimately just take the jump.
Just do it and never give up. Well, Boris, thank you so much for your time. It was great chatting, really inspiring, and all the best for the future.
Thanks so much for having me. Bye-bye.
Well, another fantastic guest on today's TBE podcast. I hope you found it as inspiring as I did. Now, just before I leave you until our next episode, don't forget, if you are looking to fundraise, I would love to hear from you. Please just send me a message on Instagram at Ollie Forsyth or send me an email. You can send me an email by emailing info@tbeclub.com. And just before I do finally leave you, if you have 5 seconds spare, please do go and give us a review if you can. It would be hugely and muchly appreciated if you can. That's it for this week. We hope you join us again next week for another fantastic guest on the TBE podcast. Don't forget to subscribe.